There's a number sitting inside your bank account right now that most people never think about. Every dollar you own is worth something today because of a handshake most Americans have never even heard of.
So here's a question. What happens to the value of your money when the thing propping it up quietly disappears? You feel it every time gas creeps up at the pump, every time your paycheck seems to buy a little less than it did last year. That feeling has a hidden cause, and it starts thousands of miles away, in a desert kingdom most of us will never visit. Because right now, somewhere in the Gulf, that's exactly what's happening. Oil, the one resource every country on Earth needs, is starting to trade in a currency that isn't the dollar. And almost nobody is talking about it. For 50 years, this arrangement has been so stable, so invisible, that people just assumed it was permanent. It wasn't a law. It wasn't written into any treaty you'd recognize. It was a deal, a quiet one. And it's starting to come apart. Let's go back to 1974. America had just come off the gold standard. The dollar was floating, untethered, and nobody quite knew what would hold its value up. Then, in Washington, U.S. Treasury Secretary William Simon sat down with the Saudis and struck an arrangement that would define the next half-century of global finance. The terms were simple. Saudi Arabia would sell its oil exclusively in dollars. Every barrel, every contract, priced in greenbacks. In return, the U.S. would protect the kingdom militarily. Warships behind an economic promise. There was more to it, actually. A secret piece of the arrangement, only confirmed decades later, tied American arms sales directly to Saudi Arabia, funneling its oil profits back into U.S. government debt. Every barrel sold became, in a sense, a small vote of confidence in the American dollar. And it worked beautifully. Oil is priced in dollars, which means if you want oil, and everyone wants oil, you need dollars first. That single fact created a bottomless well of global demand for U.S. currency. It let America run deficits other countries could never survive. It gave Washington the power to freeze entire economies with a signature, because so much of the world's money had to pass, at some point, through the American financial system. Now here's where it breaks. In February of 2026, war erupted around Iran. And in the chaos, Tehran found a weapon nobody expected. Not missiles, not an oil embargo, a toll booth. The Strait of Hormuz is the narrowest, most critical waterway in global energy. Roughly a fifth of the planet's oil passes through it. And Iran started telling tankers, you can pass, but you're paying the toll in yuan. Not dollars, Chinese yuan. Let that sink in. A choke point that's carried dollar-priced oil for 50 years just started demanding a different currency to let ships through at all. Nearly 2,000 vessels backed up near the strait. Some crews paid in cryptocurrency just to avoid the dollar entirely. That's not a policy shift. That's a signal flare. And Iran isn't acting alone in spirit, even if it's isolated in practice. Saudi Arabia, the country that started this whole system, has been quietly hedging for years. No dramatic announcement, no press conference where they tear up the 1974 agreement. Just small, careful moves. Joining a Chinese-built cross-border payment platform. Opening the door, even slightly, to yuan-priced oil deals with Beijing, now its largest customer. Riyadh still prices most of its oil in dollars, but the door that used to be locked is now just unlocked. Russia, cut off from the dollar system by sanctions, didn't have the luxury of hedging quietly. It went all in, settling oil sales with China in yuan, trading with India in rupees and dirhams, building financial plumbing that never touches a U.S. bank. And China has been building the infrastructure to catch all of it. A payment network moving trillions of yuan in cross-border trade every year. a digital currency platform joined now by central banks across the Gulf, moving oil money through channels Washington can't see and can't freeze. Here's the number that should actually worry you. In 1999, the dollar made up over 70% of the world's currency reserves. Today, it's just over half. That's not collapse. That's erosion. Slow, decade-by-decade erosion. The kind that doesn't make headlines until one day it is the headline. There's one country walking a tighter line than any other in this story, and it's India. India needs both sides. It needs American markets, American technology, American goodwill, and it needs cheap Russian oil, which right now, thanks to sanctions, mostly gets priced in yuan and dirhams. So Indian refiners are doing something quietly remarkable, settling oil purchases with Russia in currencies that have nothing to do with the dollar, while still keeping one foot firmly planted in Washington's camp.
Picture that for a second. It's less like choosing a side and more like keeping every option open in case the ground shifts again beneath everyone's feet. And this year, it's India's turn to chair BRICS. The bloc now includes China, Russia, Brazil, Saudi Arabia, and Iran, among others. On the agenda, an expanded settlement system that would let member countries move money between each other without a single dollar ever entering the chain. That's more than a dozen countries, controlling a staggering share of the world's oil and population, quietly building financial rails designed to route around the United States entirely. So what does this actually mean for you? It's not that the dollar disappears tomorrow. Almost every serious economist will tell you that's not coming. Not in 5 years, maybe not in 20. The infrastructure the dollar has, deep capital markets, legal stability, decades of earned trust, isn't something China or anyone else builds overnight. But here's the thing worth sitting with. Every time a government uses the dollar as a weapon, freezing a country's assets, cutting a bank out of the global system, it teaches the rest of the world the same lesson. Don't depend on something someone else can take away from you. That's what Russia learned. That's what Iran learned. And quietly, carefully, that's what even America's oldest allies are starting to learn too. Because the price of power is that everyone, eventually, starts looking for a way around it. The petrodollar was never really about oil. It was about trust. The idea that no matter what happened, the dollar would be there, stable, unshakable, the one constant in a chaotic world. That trust doesn't shatter all at once. It leaks. A toll paid in yuan here, a quiet handshake in Riyadh there. A percentage point of global reserves lost every few years, so slowly that nobody notices until they look back and realize how far the tide has actually gone out.
50 years ago, a secret deal built the foundation of American power. We may be watching, barrel by barrel, the slow work of taking it apart.